Hello everyone and welcome. Today I'm going to be doing a Sunday Traders talk. This talk is going to be specifically focusing on my approach going into the week of trading. So just to introduce myself, my name is Morgan. I am the founder and head of trading at MS Equities Trading. I also teach in over 30 countries across the world. I've been doing so for close to a decade. I've been trading for over a decade. And my goal in these videos is to be able to impart knowledge to you that you may be able to use going forward in your week of trading. So for this video, it is going to be a bit more long-winded, but it's going to be specifically focusing on my approach and how I get into the financial markets and get out with a profit. And then more importantly, how I learn from the process as well. So if you want to learn more about what we do, you can also follow onto the MSE Academy YouTube page, and you can see all of the content there. There's tons of educational content that you can go through. Just a important point, in the previous video I uploaded, unfortunately the sound got messed up. The problem was my supervisor was snoring on the job. By supervisor, I mean this big guy over here is my supervisor. His name is Bruno, and unfortunately he was snoring in the last video. I tried to fix the sound and it didn't work. So sorry about that, but we're going to make sure that he does not snore in this video and that the sound will be perfect. Okay, back to being supervisor. Okay, so to get started on this video, as always I say, make sure to be organized, use a clean setup. On this trading video, you'll see I'm going to be using MetaTrader 5, and then more importantly, keep some writing tools with you. I am old school. I find that when it begins with an idea or with analysis, try to keep it on paper. For my students, we have a lot of complicated analytical spreadsheets that we make use of, but everything begins here on paper. So we're going to kick it off with looking at the VIX Volatility Index, and then we're going to go through to the US markets, the Euro US dollar, gold, the pound Swiss franc, oil, and then Bitcoin at the very end of the video. So as you can see on the charts, the VIX Volatility Index has been going through an extended period of a downtrend. Volatility since around about the April time in 2025, March, April, has been dying down quite a lot. So there was a lot of stuff with regards to the tensions across the Middle East that created a lot of volatility. But as you can see over here, the market is continuously falling. So what I like to do with the VIX Volatility Index is just take a look at what's happening, just that I can see if there are any big spikes. If the market's in an uptrend, then I know there's going to be a lot more volatility going into that trading week. And I also just take a look at the market structure as well. So if you can see here, the VIX is sitting down on this support level. There is quite a strong support level around about here. I would say it's testing the support zone. So you can see over here, there is a zone that is very historic over here. So what I just like to make use of is I put my support and resistance levels at the previous highs just to see market structure. And that allows me to be able to make use of where I'm going to be placing my zones. So if I just take a arrow and I just show you where I'm really taking a look at. So you can see over here, there's a lot of market structure on these support levels, and you can see these are creating a support level zone where the market could be bouncing off right now. Now, in terms of analyzing charts, I tend to start off with a clean chart, no indicators. But for this one, I do tend to have the stochastic and the MACD just to take a look at what sort of levels the indicators are moving to. So as you can see on these levels, it is quite oversold. So there is a chance that going into the end of the month and the rest of the week, there's going to be a little bit more volatility. So if we see market bounce off this level, we could see market moving a bit higher towards this previous resistance level. But as you can see, the trading inside of this channel, this horizontal channel, has been quite strong. So I'm just going to say here on the VIX, it is on a 3-week downtrend. So let me just clear this chart here. So if we take a look at on the weekly, you can see the last 2 candles have been bearish. So I'm just going to say here 2-week downtrend. And then I'm just going to say where I've been able to put my levels on the daily, I'm just going to say that it is meeting historic support. And that is at the level of around about, I'm going to call it 1555. So for my highlighters, I like to color code things. It allows me to see what I'm making stand out on my notes. So I'm just going to mark the 1555 level as a historic support because that is currently where price is sitting. Then most importantly, I'm just going to say here the candle, the daily candle. So I would suggest to keep an eye out on this VIX. You could see if the market moves higher, there could definitely be potential upside to the 20 zone. So I'm just going to say here, therefore, and I'm just going to make sure that I mark that as a warning, just so that I know in my trading notes that I keep an eye on, knowing that there could be some intended volatility. Now, for volatility, that is sometimes very good, but if you're taking longer term positions, then you're obviously going to want to be a little bit more wary of, the market structure and volatility going forward. At the end of the day, us as traders, we capitalize on volatility to make money. But if you're trading the market during the day, scalping, then you want to be a lot more careful with your volatility. So going into the US 100, we're just going to take a look at that. I mean, on the weekly, you can just see it's been all bullish. So as you can see, there was a massive market sell-off from February through to around about April. So this is coming off previous highs. The market sold off. We had quite a big correction, and now the market has recovered and we're printing new highs consistently. Now, the previous candle that you can see here, we're sitting on a spinning top. Historically, we are meeting, basically, we're printing new highs every single week. So to be able to tell whether the market is going to come off from this top or not is difficult to tell. If we see market moving back, we could see it bouncing off this level over here, this support zone. And if the market continues to move lower, you could also see the market moving down to this level around about over here. And then these are some of the previous, the historic support and resistance zones that you can see here as well. So it just depends on what you might be looking at on this market. In terms of trends, trends are going to be showing quite consistently in this area. You can see how the market has re-entered this trend zone. So there was a price channel trading here. That price channel was quite consistent since about 2022. And you can see how the market has continued to move upwards and has now re-entered that zone. So I would suggest, in terms of what we're going to say here for the US 100, and those new highs, we're sitting at 23,700. Previous week's candle, we're sitting on a spinning top, and I would just care to say here as well that price has re-entered bullish channel. So for that, I'm just going to keep that over there. Now, in terms of trading this position, you can of course go long, but when the market is printing new highs, what I would have basically done here is I would have gone long somewhere inside of this zone. As you can see, the market pulled back slightly. Let's just go down onto the daily. The market was covering quite an intense bull run. You can see how the market tested these levels over here. And then there was a strong pullback down into this zone. And then as the market continued higher, you can see how the market tested this level. It regathered its momentum and then basically just continued to shoot higher. So It's difficult to be able to tell. I mean, this zone over here would have been where you'd want to have gotten in if you were bullish, if you wanted to go long. But as you can see here, the market has tested this level and there was quite a strong pullback. So in terms of going long this market, I wouldn't necessarily go long currently. I would wait for a pullback somewhere into this zone. Let me just clear these. I would wait for a pullback somewhere into this zone over here. And let's say, for example, you would either want to meet this zone somewhere in this area, perhaps as a support level. You'd want to meet somewhere around in this zone, and then wait for that zone to keep moving higher, and your risk reward would not be too great, because when you're printing new highs, there's not really a target zone beyond a guess, because there is no previous market structure. So these would be the two levels I would look towards, whether it would be this level or the level lower down. I would suggest that it would be better to wait until market tests off this level and then see this level is the 22,139. So I would just say here is printing new highs, avoid no current structure. So in terms of going on to the next part, I would take a look at the Euro US dollar. So that is the most traded currency in the world currently, or currency pair. And I would suggest that in terms of taking a look at the Euro US dollar, you'll see on this video over here, we were analyzing the beginning stages of the Euro US dollar pair. And there was a lot that I was able to talk about there in terms of identifying market structure on support and resistance. Now, if we take a look over here, you can see how the market has reached some strong historic support and resistance zones. So I'm just quickly going to mark my support and resistance zones over here, that you can also see the same market structure that I'm taking a look at. So in terms of where I'd probably be looking to next in this market, let me just quickly pull out my notes from the previous trader talk. So on these notes, I can see here that I spoke about the Euro US dollar is bullish weekly. It's meeting a historical resistance. The market could continue on to the 122 zone, or it could pivot and come back down to the 112 zone. Otherwise, you're going to see the market sitting within that range. So what I'm basically saying over here, let me just surmise this very quickly, because I've already done it in the video. And if you want to take a look at that, then you can. So what I was basically saying is the market could move higher to this zone. It could move lower. Let me just move these out the way. Market could be moving higher up towards this zone over here, the 122 zone, or the market could move down to this 112 zone as its target one. Otherwise, you could see the market trading sideways towards this zone. So your risk reward on this position is not incredibly good. I'm still leaning towards seeing if the market's going to pivot and it's going to move lower down to the 105 zone. So this is really where I'm hoping the market is going to move to. So I did say here's your continuation zones could be the 122 and the 127. For a pivot, you could see it going from the 112 down to the 1048, which is basically the 105. And then in terms of the range, it could be sitting within the 116. So for me personally, I would say you got to do a little bit more analysis to this position to be able to identify what it could look like. If you want to take a look at that video, I'm going to be doing phase 2 of that video on Monday and uploading it, and then you can be able to take a look at that. So I just want to jump into another currency pair or another pair. We're going to be looking at gold. So gold is trading very similarly to the Dow Jones. You're just printing new highs consistently. And as you can see here, the market has broken out from this previous market structure and just continued to move higher. This was a beautiful trade that I took quite a while ago, and I was able to do quite well off of it. So I basically saw this funnel was just building up volatility, and it was creating momentum moving higher. It was interesting to see because the market almost seemed as though it was breaking out to the downside, but I just knew during that period of time the market was wanting a more expensive gold price. So I did see this as a bit of a fake out. Let me just show you over here. I did see this level to be more of a fake out and not a breakout. So that's usually a breakout that retraces back into the zone. And you can see here how the market has just broken from this level and just continued to move higher while it has regrouped once or twice on these two levels and continued to move higher. Now, it could be considered that the market is currently regrouping. You can see how the market's generating a lot of volatility here. So in terms of gold, I'm just basically going to take a look here and say that overall bullish trend. And you can also see currently that the market is regrouping at this level. So let's just take a look at this market on the daily. So you can see over here, it's similar to what I was previously looking at, is the market over here had quite a good setup for volatility. And how we take a look at that is some people call it a breakout, a funnel, a pennant. A pennant is probably the most common name for what this market structure looks like. So you can see here that the market's volatility is causing, some people would call this a loss in momentum. However, what this often is seen as is the buyers and sellers are fighting for a price, and no one has been able to decide what that price might be yet. So if we take a look at the previous highs, I'm just going to make use of a horizontal line. So one of the questions that a subscriber asked me in my previous video was, do I place my support and resistance levels or my trend lines on the wick or the body of the candle? It's an interesting question. I think it does come down to preference. For myself, it depends. I tend to take a look at the wick of the candle and see if it is on a larger time frame. That wick might mean that the intraday trading on that day is going to have a lot of value. However, if it's a daily candle, that wick could have been, let's say, an hour's worth of trading. So as you can see here, the market pushed all the way up into this price channel over here and pulled all the way back down. So it would be best in terms of here, this is the hourly chart. You've got a good few, let's take a look here, how many hours? You've got 13, 14 hours. So that's a full day of trading that you've got inside of this zone. Whereas if you take a look on the daily, it just looks like a candle wick. So if the price data is really important for that wick that's been formed, then you want to put your support and resistance level at the tip of that wick. Whereas if you don't, if you can see that it was just a very strong spike and the market pulled back very quickly, then just place it on the body of the candle on the larger time frame. If you don't know too much about candlesticks, that's fine. I've got a candlestick PDF that I can send through to you. So down below, you'll see there's an email address. Just email that email study@mse.academy and just ask for the candlestick PDF and we'll send it straight out to you. And it will allow you to learn a bit more about trading candlesticks and about how to understand and analyze them better. In terms of this, though, you can see that the market is entering into this volatility funnel. So you would need to also consider that in your trading. So what could be the potential outcomes? The potential outcome is the market could go one of three directions. The market could move higher, so continuation. The market could move horizontally, so it can continue trading sideways, or it could pull back and it could retrace. So in terms of that, I would take a look at where the daily is. And then what I'd take a look at is we've got our resistance zone. Let's just take a look at the support zones here as well. So you can see there was a zone roundabout over there where the market has been trading towards. So your potential zone for a continuation could be between the 3440 level and the 3500 level. and your potential pivot could be the 3280 down to the 3160 level. And your interrange trading could be anywhere between your 3440 level down to your 3280 level. So what we're establishing there with the support and resistance levels is your zones. Now, in a market, it can go one of three directions. It could go up, down, or it can continue trading inside of that price channel. So we have established our three price channels here, and that is an important piece of information because that gives us a better understanding of where the market could go. So I'm just going to make sure we write here NB for important, and make sure you just give it some highlights so that you know that is a key point. And if you want to analyze into this market further, then you could do that. Now, in terms of seeing market structure, now this market is, you can currently see bearish. Now this market could continue to pull back down to this zone, the sort of 3,300 level. Now, if this market pulls back to this level, it could retrace back to the higher levels towards 3,400, or you could see the market continue to move lower. So say, for example, you want to see if this market sits on this level, you could see it could either move to this trend line over here, or it can move slightly lower down to this zone. So if there were two zones I'd establish over here, it would be to see if the market decides to move to this level over here, or if it moves to this level over here. Now, that is obviously down to you to decide. For myself, this is for educational purposes only. I can't really tell you what trades to take, but if I were to take this trade, I would wait for the market to hit this trend line, and I would put my order somewhere slightly below that trend line, because as you can see, the trend line was pierced here and it was pierced here as well. So one of the challenges is you could enter your order. Let's say, for example, you could enter your order somewhere inside of this zone over here, okay? But your problem is that your potential downside is going to be quite high, because your potential downside, where you're going to set your next stop. I mean, I'd set my next stop probably, I would call this around about here my stop zone if I went bullish. So meaning if I open a buy order, and I would set my potential profit zone over here. So you're looking at minimum of a 1-to-2 risk reward ratio. But that's the problem, is if there's any slippage to the market, that market could hit your stop loss quite quickly. Now, stop losses get hunted by the market. It's a commonly known thing by professional traders that they'd often put their entry point where a lot of stop losses would normally sit. Now, let's say, for example, you think the market could continue lower and you'd like to reverse this. Then let's say, for example, your potential entry zone would be if the market breaks below this level. Let's be a little bit more braver. Let's say, for example, if the market breaks down this level, you could see the market moving anywhere over here. But the problem is your potential downside, once you enter that zone, is going to be anywhere up to its previous resistance level. So even though your profit could be slightly higher, if the market goes bearish, your loss could also be slightly higher if the market goes bearish. So it's completely down to you to decide. For myself, I'd like to take a look at this trade over the next couple of days. So what I'm going to just say here is monitor daily. Okay, so we've now taken a look at 4 different markets. We've taken a look at the VIX, the US 100, the Euro US dollar, and the gold markets against the dollar. For now, I will be able to say that the VIX has a potential for a bounce to the 20s, and I need to just keep an eye on that. So I'm going to say monitor weekly over here. That's something I forgot to add. So I will just keep an eye on that weekly, which I normally do. But then in terms of the rest, the US 100, I can see it has no current structure. The Euro US dollar, there's no change. And as you can see on the gold markets, I'm going to be monitoring that daily for a potential support test. So for myself, when I'm analyzing the markets, the moment that I see something that is worth analyzing, I'm going to dive into that. I'm going to take a vertical direction straight into that position instead of continuing my analysis right across the markets. So I'm going to spend a bit more time focusing on the gold market position, entering all of that information into my spreadsheet so that I can see what it aligns up with in terms of the rest of my analytics, my fundamentals, technicals, quantitative, and then qualitative. And then I'm going to take a step back, take a look at the whole market altogether, and decide if this position is worth taking. So that is definitely going to be one of the major positions that I take a look at, is position number 4 on the gold markets. So as you can see, very simple, standard and straightforward, and already on my hunting list, I have a position that could be a potential profit. The main focus for me, however, is now to stick to the process and be able to see what the potential opportunity going forward might be for my trading portfolio. So you can see this is my stock standard approach. This is how I take a look at the financial markets as a professional trader, someone who's traded for over a decade. And for someone that has been teaching people how to trade for close to a decade, this is the same thing that I teach to them as well. So I hope you were able to gain some information and knowledge from this video. And if you are interested in learning more, please take a look at our MSE Academy YouTube page. There is so much to learn on that page that I am sure will be helpful to you. And if you want to get in touch with our educational team, you can email study@mse.academy and we'll get in touch with you. Most importantly, I wanted to say, stay safe out there. There are a lot of scams out there. There are a lot of charlatans that are selling courses that are absolutely worthless. And please make sure that, most importantly, you do not invest money with people that have only a social media page. If you are really only interested in people that have social media pages and you want to invest money in that Forex opportunity, please don't do it, because it is an unwise decision. And if you want to learn about how to avoid Forex scams, you can take a look at one of my most popular videos, which is how to spot a Forex scam. And that lists 4 steps that you can make use of. So please take a look at that video, that it will be able to educate you that you can avoid being the next victim of a Forex scam. And please don't contact me if you've lost money and you want me to get it back, because if you can't get it back, I can't get it back for you. Once again, thank you so much for tuning into this video. I really appreciate your support. Leave a comment down below if you have any questions, and I'll make sure to answer those questions in the next video. So to the subscribers that answered in my previous video, I'm going to be answering that in the next live traders video on the Euro US dollar. But for the Sunday Traders Talk, this is what I'm going to be focusing on and ending at now. And I'll make sure to see you in the next video. Cheers for now.